All right, thanks for tuning in to our local market update. My name is Mike Laven. I'm from the Laven Team here at EXP Realty Vermont. You can check us out online at thelaventeam.com and vermontcondopros.com, as well as our YouTube channel right here. We're going to give you this weekly market update, take a look at what's happening as far as trends in the local Vermont market, as well as the national market, and sort of compare those trends. And we're going to look into what's happening with mortgage interest rates this week. And mortgage payments and in relationship to median income. We've seen a lot of scary headlines in the news about that, and we're going to try to dig beyond those headlines a little further, look at some other data, and try to really give you some insight as to what's happening there. So let's get started with this. The name of the game right now, as you can see, is record high prices. It's still happening right now. Prices are really pushing up, and this is mostly being caused by low inventory. And the low inventory has to do with the high interest rates and some other factors. Let's take a look at what's happening nationally right here. We can see these three lines here. Blue is 2023, the black line is 2022, and the orange line is 2021. And you can see this is median sale price. This is the national numbers, and you can see the trend here of 2023. It looks like it's pretty soon going to cross over the record high numbers of 2022. And you can see that we peaked out here in 2022, the 4-week period ending June 19th, with a $387,000 median sale price nationally. And you can see for that same period ending this year, those same 4 weeks, we're currently at $383,000, just 1% off the record high prices. You can see the trajectory of this line. I'm pretty sure that when we have a market update in a week or two, we're going to be looking at this, showing that it has crossed over this threshold, and that 2023 has overtaken 2022 as far as that. And we're gonna dig into these numbers a little more about the low inventory and why that's happening. But let's compare this now with the Burlington metro area. Sort of greater Burlington, and see what's happening here. And you can see it's a pretty similar trend, but it's even surpassed it here. The 2023 numbers here in greater Burlington have already broken through that line. They did it back in April here, about April 17th or so. And it's been on this trend higher since then. You can see it's pulling back a little bit right now, but as you see the 4-week period rather ending June 11th, we had a record high median sale price of $478,000. Which represented a 12% year-over-year increase of where it was a year ago. And you can see the two peaks we hit here in 2022. Here, the 4 week ending June 26th was about 456, and a little bit later here into August was about 457. So pretty similar, and it looks like we're trending back downward. Maybe we're going to plateau somewhere near those same sort of numbers from last year. Or maybe this is going to keep trending upwards here, and we're going to keep getting a higher and higher price, because you can see there is a pretty clear pattern here of these sort of small ups and downs, but the overall trend is definitely upwards. And so we're going to take a look at this, what's happening with new listings, what's happening with the number of homes in the market that are selling. Let's look at new listings first of all. We're still in greater Burlington here. New listings, I mean, this is way below the previous 2 years. These three colors here are the same at 3 years here, 2023 and 2022 and 2021. We see that here for the 4-week period ending June 18th, there were 35 new listings in the market. That's 54% where it was a year ago. And that was already a historically low inventory, tight inventory market, the 2 years previous to that. If you see in 2022, that same period, there were 78 new listings. And right now we just had 35 new listings. And if you take it back to 2021, there were 99 new listings. So this trend is way below. It appears to be trending even lower right now with the most recent data over the last 2 to 3 months. So that's pretty interesting. We're looking at a very tight inventory market, which obviously is driving prices higher and higher. Also, number of homes sold. Let's take a look at this. We can see here that it's pretty similar as far as the trend. The 4-week period ending June 18th. 42 homes sold in greater Burlington. That's 37% where it was a year ago, below where it was a year ago in an already very tight market, where there were 68 homes sold in the same period. So this number, I mean, it looks like it's trending higher, but still it's way below where it was just a year ago and 2 years ago. So that trend, it definitely appears to be on the lower side. And again, we've seen that pushing the median sale price up. The Burlington market in general seems to be reflecting the national market fairly well. It's not that different. If we go to the national market again, we see the threshold of median sale price hasn't quite crossed over the record of last year. It hasn't quite surpassed it yet. But if we look at the homes sold nationally, same sort of trend as to what's happening here. If we look at the new listings coming to market, same thing, with the trend being lower, and it also appears to be trending downward right now as we come through June here. So that's definitely what's happening there. So it's if you're looking to sell your home right now, there's great prices for it. Now, what's holding back a lot of sellers in the market, I speak to a lot of sellers on a daily basis, is that the people looking to downsize whatever it is, and they're locked into an interest rate from a couple of years ago where they've got 3.5%, 4.5%, somewhere in that range, and they don't want to dump their property right now and go buy another home and all of a sudden be locked into a 6.5% or 7% interest rate on their mortgage. So it's interesting how it is hindering some buyers because their buying power is reduced because of the higher interest rates. But it's really hindering the market overall right now because sellers are sitting on the sidelines waiting for some kind of relief in those interest rates. But we're not really historically that far off in interest rates. You've probably heard this a lot, okay? So let's dig into some of the data. This is the one I see the most often right here when it comes to national sort of, financial website sort of headlines that you see, whether it's be CNBC or whatever kind of site you like. You see here, home buyer housing payments 15.1% up year over year, the 4-week rolling average of the median, based on the median asking price of a home. We see the data from May 28th there right here, was $26.51 as the payment, and that was based on a 6.79% average interest rate. And sure, that's higher than where it was a year ago in 2022, where it was closer to, it looks like about $2,300. And if you go back to 2021, it was closer to $1,600, et cetera. You can see these numbers here. So that's definitely up. And if you see that headline, it looks fairly scary. And oh my God, mortgage payments have gone way up, which there is some substance to that. But let's look further into the data. Let's look at what's happening. First of all, with interest rates historically, we had this really great period of historically low interest rates not just coming into the financial crisis of 2008, but also after that, the period from that leading up to 2019 or so. We were just in this just really great period of time here where the interest rates were hovering around 5% or below. And if you see coming out of, you've heard this before, probably from many people, coming out of the 80s, we had interest rates that were closer to 15 to 20%. And it's the 90s, they sort of started gradually trending downwards, which was a nice thing for home buyers. Now let's take a look more carefully at just the monthly mortgage payment. Look at this. This is the actual payment amount, which back in the early 90s was in the $750 range and started trending gradually higher towards 2008, where it peaked out around $1,300 or so, $1,200 for a median average. This is based on a 20% down and a 30-year fixed rate. And we see after the 2008 crisis, it pulled back, and we had this nice sort of period here of lower interest rates and lower mortgage payments. But it was steadily trending upwards over that time period. And then we sort of had this sort of extreme spike right here. But of course, there was a lot of inflation happening at the same time around this time period too, as the government was putting a lot more money into the market, right? So let's take a look at how that reflects if you look at it adjusted for inflation. So that same chart we just saw, if you look at it adjusted for inflation and look at it all in terms of 2023 dollars, we see that back in 1989, again, adjusted for today's dollars, the payment was closer to about $1,750. Then it started trending downwards in the 90s and had this nice sort of climb as it sort of came back towards that range into 2008. And then we had this sort of like golden period of really low interest rates that were very reasonable for buyers. And so we had it pulling back here into this $1,000 range and below as it started trending back upwards. And then we had this spike here at the end. But again, if you see where this sort of fairly average area was, we had these two sort of nice areas that were below average. But we're not that far from coming back to that. The trend now has been pulling back at the inflation-adjusted average. And you can see that if we get just a little bit of relief on interest rates, this is probably going to pull back even more. And we're going to be back into that same sort of standardized range where people like to think of interest rates as being and mortgage payments. So, but let's also take a look at what's happening with median household income and also percentage of your income that you're putting towards your mortgage payment. The median household income, if you look at this red line, this is the actual nominal income. This is going from 2000 to 2023, basically. $40,000 rising up to about, $75,000, $80,000 now. But if you put that in terms of 2023 dollars and adjusted for inflation, we see that we always have this sort of general range here for a long time where the inflation adjusted income was about 70,000, 72,000. After 2008, it dips back a little bit. We have this nice steady climb. This is a really nice steady climb here leading up. And as you adjust inflation, you see we're hitting like record highs now with we're getting into like more like this 80,000 range here, which is higher historically on average than it has been going back. So it seems like we've had a nice spike in people's income and wages going up too. So these are factors that they don't really cover as much in the headline for those articles when they're talking about just the scary mortgage rates and the payments going up. And we see also, this is another important number here to talk about real quick, is your mortgage payment as a percentage of your median household income. Again, this chart again is going from 1989 up to our present time. We see that this whole period as we came out of the 80s into the 90s, generally and for most households, their median household income, they spend about 25 to 30% of their income on their mortgage payment. And again, then we had this just really nice sort of area here from 2010 up to 2019 approximately, where people were only paying like 15 to 20% approximately of their household income on their mortgage payment. And then it's been pulling back up, but it's really just pulling back up. If you look at this, it's pulling back up into like basically historical norms. If we get into back to this 25 to 30% range, well, that's kind of where we are right now. It looks like it's spiking higher, but again, this could plateau very easily and pull back a little bit if we get some relief on interest rates. And as you've probably been following with the news with the Fed, it does sound like they are going to do 2 more interest rate hikes coming up. So there's been some uncertainty about that. Obviously, we don't know exactly what they're going to do, but it is predicted that interest rates may rise some more in the short term, but in the long term, they are going to pull back at some point. So hopefully we're going to see these numbers. But I just wanted to put this a little more in perspective for buyers and sellers out there to understand these numbers are not necessarily as scary as you might have heard or seen in a headline somewhere. So that's about it. We just wanted to touch on some things that were happening in the Vermont market and the national market and sort of compare those numbers we saw about record high prices and why that's happening. And then just dig into these interest rate numbers a little bit and mortgage payments and give you some insight on that. I hope this was helpful. I hope maybe this information is useful to you. Obviously, if you're looking to buy something, make sure you visit our websites, thelaventeam.com and vermontcondopros.com. And especially if you're looking to sell something too, or you just want to get some pricing information, pricing by real human beings who can give you some great insight and price on your property, make sure to contact us as well. All our contact information is in the information below this video. You can also find that on our websites, etc. So feel free to give us a call, an email, wherever you want, anytime. We'd be happy to talk to you. So I hope this market update was useful. We hope to see you next week. We're going to provide you with some more information then, take a look at the trends and see what's happening in the market and see how things are changing. We'll see you then.